This is Connor Christy. My dad's going to talk to you now.
Thank you, Connor. Hello, this is Brandon Christy with Christy Capital Management with an educational economic update for July 2018. In this month's video, I'll discuss some of the major headlines that influenced markets in June. I'll also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end for a required disclosure statement. We are now halfway through 2018, and the markets have proven and to give us a lot to think about this year, including increased volatility. If you recall, January brought new highs, record highs, to major U.S. indexes. Then concerns about interest rates jumped, reversed some of the gains. Next, equities began to rebound thanks to positive economic data and corporate earnings before the current trade tension brought volatility back to the markets. Amid these fluctuations, indexes have made mixed results. In June, the S&P 500 added 0.5% and the NASDAQ increased 0.9%. Meanwhile, the Dow dropped 0.6% during the month. For the year's first half, the S&P 500 was up 1.7%, the NASDAQ generated 8.8%. The Dow, on the other hand, was negative territory for 2018, losing 1.8%. From economic data to political updates, much of the information we received last month was also painting a mixed picture for current circumstances. For example, unemployment hit its lowest level since 2000, but the gross domestic product reading missed expectations. Also on investors' minds last month was the year's second interest rate increase from the Federal Reserve. When announcing the increase, the Fed gave an optimistic view of the economy's growth and indicated that 2 additional rate increases could occur this year. Throughout June, we also experienced an array of dramatic geopolitical headlines. President Trump met with North Korean leader Kim Jong-un in a highly anticipated summit. Despite expectations, the meeting had little effect on stocks. Concerns about a trade war, however, weighed down the markets for much of the month. From Canada to the EU to China, trade tension between the U.S. and many other countries continued to rise. The U.S. added new tariffs to goods from some of our largest trading partners, and those countries promised their own tariffs in response. While the drama affected stocks, markets have remained relatively stable despite the escalating rhetoric. So far, fundamentals have been the true market drivers this year. As we move into the third quarter, trade will be an important detail to monitor, but it's certainly not the only one. In particular, corporate earnings will be key. The most recent data indicates corporate earnings may have grown by 20% in the second quarter. If this results mirror the predictions, such performance would be the second fastest growth since 2010. Currently, the markets feel like they're on a seesaw between strong economic fundamentals and escalating geopolitical tension. Amid this back and forth, we will be searching for balanced perspectives on where the economy truly stands and what may be on the horizon. Well, that's it for this month's Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Well, this is Brandon Christy saying thank you for listening to this month's Educational Economic Update.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.